Hey everyone, and welcome. Today, we're going to break down some really crucial tax changes coming in 2025. We're essentially building you a new financial toolkit specifically designed for ministers.
Okay, so let's just dive right in. For ministers, 2025 isn't just another year for taxes. There are some huge changes on the horizon. And if you're a bivocational minister, maybe you're driving for Uber or delivering food on the side, these updates are absolutely for you.
So here's the game plan. We're going to start with why 2025 is such a big year of change. Then we'll unpack your new financial toolkit, look at some key benefits for your family, and then wrap it all up with a clear summary and what you need to do next.
First up, let's talk about this new toolkit, Schedule 1A. Seriously, think of this as a brand new set of tools the IRS is handing you. And what makes them so powerful? Well, you can use them to lower your taxable income, even if you take the standard deduction. That right there is a total game changer.
So what exactly is in this new toolkit? We're going to focus on 4 major new deductions. These are called above-the-line deductions. There's one for tip income, one for overtime pay, another for car loan interest, and a brand new one just for seniors.
Let's start with a big one, especially for anyone who's part of the gig economy. The maximum deduction you can now take for qualified tip income is a pretty substantial $25,000.
So how does this actually work? Well, if your modified adjusted gross income, that's your MAGI, is under $150,000, you can deduct those qualified tips. So let's say you earned $18,000 in tips from driving for Uber. You can deduct that entire amount. Now remember, this isn't a deduction on all your Uber income, just the tip portion. That's a super important distinction.
All right, next tool in our kit is the overtime pay deduction. If you've got a part-time job outside your ministry that pays overtime, this one's for you. You can deduct up to $12,500 as an individual. And get this, that number doubles to $25,000 if you're married and filing jointly. And here's another totally new one, a deduction for the interest you pay on a personal car loan. The most you can claim here is $10,000.
Now, to be eligible for this one, your MAGI needs to be below $100,000 if you're single or $200,000 if you're a married couple. But, and you really got to listen to this, there is absolutely no double dipping. I repeat, no double dipping. If you're already taking a mileage deduction for your ministry work, or you're getting reimbursed through an accountable plan for using that same car, you can't also deduct the loan interest. It's one or the other. You have to choose.
Okay, let's move on to something that is just a fantastic new benefit for our senior ministers. A qualifying couple can now take a new deduction of up to $12,000.
And here's what makes this so amazing. This is for anyone born before January 2nd, 1961, and it's $6,000 per person. But the best part? It's in addition to your standard deduction. So a qualifying senior couple could get their normal standard deduction plus this extra $12,000 right on top. Wow. Just one key thing for ministers to remember. Your housing allowance is included when you calculate your MAGI for this particular deduction. Okay, so we've covered a bunch of new deductions that can lower your income. Now let's shift gears a bit and look at 2 new things that directly benefit your family.
On this slide, you can see we're comparing 2 very different tools. On the left, you've got the enhanced child tax credit. Think of this as immediate help, right? It's cash in your pocket. But on the right, you have the new Trump account. This is all about playing the long game, building a financial foundation for your child's future. So what in the world is a Trump account? Well, it's a brand new way to save for kids born between 2024 and 2029. When you do your taxes, you can opt in, and the government will put a one-time $1,000 seed fund into an account for your child. Now, this isn't a tax refund you can spend. It's an investment that just sits there and grows, and then it automatically converts to an IRA when your child turns 18.
Okay, just a quick but really important heads up about the child tax credit. Because of the unique way a minister's housing allowance works, the IRS computer system, well, it can sometimes get confused. It might miscalculate your credit because it excludes that housing allowance, and that can trigger a scary-looking notice called a CP 2000. The number one takeaway here is do not panic. If you get one, just consult with a tax pro who understands clergy taxes. They'll know exactly how to handle it.
All right, we have covered a lot of new ground, so let's pull it all together in our last section here with a quick summary and some clear next steps for you.
Think of this as your simple checklist for 2025. First, you absolutely have to explore those 4 new deductions. Second, do what you can to maximize that enhanced child tax credit. Third,
Have a conversation about whether the Trump account makes sense for your kids. And please, please remember those two big warnings. No double dipping on the car interest, and keep in mind that your housing allowance can affect your eligibility for some of these new benefits.
You know, this really just says it all, doesn't it? These new laws offer some amazing opportunities, but you can't take advantage of them if you're not prepared. Preparation is absolutely key. So, what should you do right now? Here's a simple 3-step action plan. First, take a good, hard look at all of your income sources for 2025. Ministry, side hustles, the whole shebang. Second, based on that, figure out which of these new goodies you might actually be eligible for. And third, and this is probably the most important, talk to a tax professional who really gets clergy taxes.
And that really brings us to our final question. We've laid out the new tools, we've walked through the new rules, and now it's over to you. Looking ahead, what's your plan to save on taxes in 2025?